Welcome back, Zhemyr. It's been a while. We haven't had you here on our podcast, and it's a pleasure to have you. We know you're here representing yourself in an individual capacity, but you're also a vice president at JP Morgan Chase at a role where you're uplifting the community. And that was the initial connection that we had with our nonprofit and yourself. So welcome back.
It's been a pleasure. It's always a pleasure to be here with you guys. Obviously, we're definitely mission aligned. And the opportunity to come in and chat with you guys, it's always something I look forward to.
Yeah, we're super excited to have you here. I mean, last episode that we had you, a couple of the clips, or a good amount of them, we're going pretty viral. A lot of people liked, what you're sharing. I think last time was more of a focus on your career journey. I do want to touch a little bit about that, but I also want to talk about banking, the banking services that people can have access to that they don't even realize they have access to.
Yeah, I think from the last podcast, you sent me a message saying, you quoted someone saying, the bald-headed guy knows his stuff, right? So, so that said, I actually have a fresh look again this morning to make sure I follow the same trend.
And you got some fresh sneakers as well.
I do. Hey, you inspired me. You wear sneakers with fashion. You sport them even in a professional setting. I'm just following suit.
Thank you, man. I love it. I love the suits. I love the style. But you know what? Let's get into it.
Let's do it.
I want to talk a little bit about Zhemyr. Who is Zhemyr, right? And I'd love if you can share, briefly, how'd you get started in banking and where your role is today?
I was recruited into it by a fraternity brother, a brother of Delta Sigma Pi International Fraternity. And I was at a career fair and he said, hey, I'm in banking. Why don't you give it a try? Why don't you come in for an interview? And, the rest is history, really. The fact that I've been able to listen to individuals' needs, tie it back to different solutions, resources, and really future planning to create generational wealth has really been, again, my North Star really for the last 23 years. 23
years. Most people wouldn't stay in an industry for that long. So that's interesting that you say it's 23 years. I'm assuming you didn't stay in the same role within the banking. You had different roles, throughout the years, right? Leading up to where you're at now.
Yeah. And it's been a number of different roles. So from originally, loan originator, loan originator manager, area manager, and then from there, switch industries, went from lending over to retail banking, was a branch manager at a number of different stores, from one of our smallest stores in the area to one of our largest and most profitable stores that we have nationwide. And then about 3 years ago, in fact, 3 years ago now in April, there was a role that came up, and it was really around community uplift, working with local government, nonprofits, mission-aligned organizations, and really with a specific focus of lifting or uplifting the underserved.
Yeah, and that's how we had that connection initially, how we met you and your very dear friend, close friend, best friend, Benny Sanchez, right?
Yeah.
And so, yeah, it's been a blessing to have, both of you guys, that role has been a blessing, not just obviously to our nonprofit, but all the other nonprofits you guys are working with. But you said so many different roles. Someone that's like probably listening and watching and they think about banks, a job at a bank, they probably just think, bank teller. That's what people usually know. You go deposit money, you go withdraw money. You're about to go on vacation, you need some money. You need some quarters because you're going to do laundry, right? Whatever it is. But within banking, there's so many different careers, right? Different paths that you could take.
So many. And you're right. And look, that we're not going to belittle what a bank teller does.
Of course.
Although that role at this point in time has grown. When we think of traditional banking, what we had maybe 15, 20 years ago, I've managed branches where we had literally 15 or 20 different teller windows.
Wow.
Because what happened 15, 20 years ago, 40 years ago, you would have a huge line of individuals coming into the branch every single day to deposit money, to pull out money, to get quarters, as you said. If you're a business owner, you also need cash. You need quarters. You need all kinds of stuff. And as a result, you had a teller processing those transactions. We've evolved as an industry. Really, as life goes on, we have cash services that are just electronic now. We have Zelle, for example. I owe you money. We go to lunch. We split lunch. I send that electronically. I no longer have to go to a bank to pull out money. But that said, that teller role at this point in time is more of a hybrid role at most institutions, where It may be called maybe personal banker, associate banker, universal banker. And this is now a role due to the fact that we have a lot less transactions in the bank. We have ATMs and, again, a lot of the electronic services where this person is no longer just depositing money, doing processing withdrawals. They're also servicing accounts, taking phone calls from customers, opening account, closing accounts, providing the everyday customer service. That's a great role. And quite honestly, if you're looking to get into banking, it's a role that someone should definitely look at. The benefit of that role also is that there's flexibility where it can be typically offered part-time, right? So that's huge. Most of the other roles, and I'll talk about some now, require full-time commitment. So what do you have in addition to the bank teller? You may have what we call a platform banker. And depending on the financial institution, it might be called something different. It may be called, say, relationship banker. It may be called also personal banker at some organizations. And that is the individual that is really doing the more complex type of accounts. That is really not just opening and closing, but also deepening and establishing relationships with the individual in front of them. They understand what that individual's goals are for himself or herself and their family, and therefore providing different solutions for that long-term planning. That's one type of role. And then, of course, you have the consumer side, you have the business side. You may have a business banker in a specific branch. A business banker is going to focus, and there's multiple levels of different bankers, just as there are multiple levels of businesses. You have a startup, you have a more complex, business. You have specific business bankers that tailor to the needs of these small businesses or large businesses. You have your financial advisor. Someone within the branch that is now going to focus on investments, on planning for the future, taking a look at not just what you want to do with your money in terms of growing with a savings or a CD, but at the same time, long-term planning, your retirement, your kids' education down the line. And really within that, I mean, man, you have the whole support system for the bank. So if you think, well, I want to get into HR, I want to get into legal, I want to get into marketing, I want to get into communications. Guess what? Most banks, they have a huge, large presence. So what do they need? They need all these different support systems to be able to do that. You want to go into project management. A bank does that. Now, mind you, many times we think of the four walls of a bank and we think, okay, teller, the banker, and that's kind of it. No, there's so much more. Because in order to make this type of institution run, I mean, you need all kinds of multi-level support. And that's your programming, right, as well. I mean, we think automatically of like an Apple or a Google if you want to go into the tech space, but banking can also provide an incredible career for this too.
Yeah, and I've met a lot of people that are now executives at banks that started off as a bank teller. So it's a great way to like open the door and kind of get a little feel for everything, because you said it's like kind of like a hybrid position. It's part-time, so it allows you to, kind of be flexible and learn a lot of different things. So I think it's a good stepping stone, right? Everyone I've met, at least now, that are executives at banks, whatever it is, industry, they always started off as a teller.
Yeah.
Yeah, a lot of them start off as a teller. But that's really good because a lot of college students that are graduating and they're looking for jobs, and obviously banking industry, there's a lot of banks, right? And it's a lot of jobs out there for a lot of people that want to work in different fields, like you just mentioned. So you mentioned a lot of good things that maybe not a lot of people know about a bank even offers, right? A lot of services, which, kind of leads me to another question, like when you think of a bank, most people, like I said, the general services, depositing, withdrawing, maybe talking to a banker to open a credit card, close a credit card, whatever it is. But you mentioned investments, financial advisor. You mentioned business banker. You mentioned, a couple of other things. What are some general services that people can have access to at a bank? I know every bank's different, but like in general.
Yeah, you're right. So in general, you started off mentioning this. When people think of a bank, they tie it back to a specific transaction. And that transaction can simply be what? Depositing money, withdrawing money. But there's a whole lot more that a bank can do. I mentioned earlier generational wealth. When we think about generational wealth, what does that involve? And what experts are there to assist you in building generational wealth? One, and I know you're a big believer of real estate, is buying a house. right? So who does the bank have to assist you in purchasing a home? Typically, a bank's going to have a lending officer. Depending on the organization, they may be more in tune with specific programs available. So they may be in tune with first-time homebuyer programs. So if an individual does not have the ability to, say, afford a home in a specific area, the home lending advisor may be aware of what programs are available in that city, in that county, to bridge that affordability gap. That's one, right? So again, the home lending advisor. The other one is the financial advisor. Or depending on the institution, it might be called a private client advisor, a financial investor advisor. These are individuals really that are going to get to know the client, really figure out what type of lifestyle they want to have now and then after retirement, and really plan for the future. They're going to be able to leverage, equities. They're going to be able to leverage different portfolios of investment, and now tie in a specific portfolio and plan for that individual to have the type of lifestyle they want. We talked about not just the average consumer, but we talked about small businesses. And of course, we have small business bankers and commercial bankers that can assist someone in their quest to scale their business. As business owners, we're focused on the everyday of our business, but not so much on the money aspect of our business, right? So that's where that business banker comes in and helps to ensure that everything aligns, so the business owner can focus on the everyday and not so much the money management side of things.
Yeah, that's great. I think those are like three great pillars, right? The small business, the real estate investments kind of tie in together. It's wealth building, right? Generational wealth, which same thing with, small business as well. It's leaving behind a legacy. I think a lot of people, they're on Zillow, they're on Realtor, whatever, all the apps to find houses, starting off with the first pillar. And they're falling in love with these houses. But I think what would you say is like the good first step to do? Should they go and fall in love with the houses, or should they go talk to someone like at a bank to find out what they can afford? Or
falling in love with a house before you do anything else can be extremely discouraging, and it can lead to a lot of stress in a relationship. Husband and wife start looking for a house. You find the house that you like, and all of a sudden, like, oh, we can't afford it. That's not the best thing. Quite honestly, the best first step is to find out what one qualifies for. So really talking to that home lending advisor that I talked about, really understanding how much you can afford, and at the same time, through their expertise, understanding what type of programs are out there. So I'll give you an example. Currently, in fact, just Friday of last week, the city of La Puente launched a first-time home buyer program. This is meant to bridge that affordability gap. So let's just say that someone goes in, and based on the income, based on different qualifiers, based on how much they have for a down payment, they can afford to buy a house that's $600,000. But that house that they found in the area was $650,000. Now, traditionally, you'd be like, oh, well, you can't buy that house. You got to keep on saving more. And then what happens here in California, as you keep on saving more, the values keep on going up, and you never really catch up. So now, a program what the city of La Puente launched, and there's other programs similar to this, will bridge that gap. So that $50,000 that may be missing, the city will cover that as a silent second mortgage. It'll basically stay there for really 30, 35 years. It is shared equity, and every program is going to be different. But again, going back to what the first step should be really understanding how much you qualify for, and then working with an expert that understands what tools are out there, even outside of their institution, that one can leverage.
Yeah, no, that's super important, especially for a first-time home buyer. And there is a lot of programs. I think California has that one, the Dream for All or something like that, right? Yeah.
There's several programs available, state, county, sometimes even city, like the one that I just mentioned right now for La Puente. And it's important that that you work with someone that knows these programs.
Yeah, super important, because don't fall in love with the house. Go to the bank first, talk to a lender that's going to get you exactly what you can qualify for, and maybe resources like those, first-time home buyer grants and stuff. And now, so that's on the home buying. Now, with investing, talking to a financial advisor, especially in the Latino community, I think that's something that's, when you hear financial advisor, it's sometimes it can feel like it's a good thing, sometimes a bad thing, because that word has been used a lot for different roles that are not really financial advisors. And so when people think about investing, especially when they're walking into a bank, what would you say is like do they have to be a certain age? Like until you're 35, you can start investing in a certain career. Or, hey, I just got out of college. I'm interested. Can they literally just walk in and talk to a financial advisor at a bank?
Most definitely you can. The misconception when it comes to investments, and I hear this all the time, is that it's for the wealthy, right? You have to be rich. You have to have millions in order to be able to talk to a financial advisor. That's not the case at all. I think it's really just mentality. Now, mind you, that's the way that I grew up.
Yeah.
My parents never invested. My parents, this was a foreign language to them, a foreign concept to them. They never did it. They had a very small 401k, and that's really because their employer said, hey, you have to do this. Why wouldn't you do this? And then, of course, they only contributed the bare minimum. Yeah. So having access to a financial advisor is going to allow you to really understand what it is that you can accomplish down the line. And again, everything is typically custom tailored to what the individual is looking for. If I'm a college student and really I want to start investing $1,000, the individual may take a look at it, maybe a self-directed account if they don't feel comfortable talking to that financial advisor. And so many different firms offer a self-directed account. If you're at a point now where you're saying, yeah, I am interested now and really talking to an expert, then that's available too. But I would say the key thing is not waiting. Just making sure that you can take steps now, because of course there's the power of compounding. There's the power of just time and the power that time has when it comes to investing. So start now.
Yeah. And so investing, home buying, those are like super important, starting a business. Now, let's say someone bought their house, they have dependents, maybe they have a business, and they're starting to build their wealth finally, right? Trying to break out of generational poverty, build that generational wealth. Now, how to protect that wealth, within a bank? Is this a service that, banks, maybe not all banks offer? Is like when it comes to like trust, what is it called? Living trust and all that. Is that something, building estates and all that?
Yeah, so estates, trust, not every bank offers that. There are a few banks that will offer this through maybe one of their specific internal divisions. But regardless if the bank offers it or not, it definitely is something that one should take a look at. Protection is critical. You've worked very hard to establish the wealth that you have at this point in time. Maybe you're motivated because, as you mentioned, generational wealth. You want to pass on this wealth to the next generation. And the last thing you want is for some type of incident to happen that now wipes you out or makes you basically have to start afresh. So really consulting if the bank does offer that service, that's great. If they don't, taking a look at an external partner, some type of expert attorney that focuses on this type of service to build that trust, that's definitely critical.
Yeah, super important. So build that wealth and then protect that wealth as well. Now, within a bank, especially, this last year or so, people have been a little, at least with us in our community, when the people we work with, they've been kind of like iffy about like, hey, is my money safe at a bank? And then, that word that has been brought up a lot, the FDIC insured, up to 250,000, right? And people want to know, is that legit? Is that something real? Is that just like a marketing thing, or?
It definitely is not a marketing thing, and it's not just with traditional banks. Credit unions also offer something similar, but since you mentioned FDIC, normally it comes down to, and I encourage everyone to take a look at the FDIC website. The FDIC website is going to break this down for you, but it's a result of not really understanding what coverages are there that individuals are unbanked or underbanked. I was looking at an FDIC article not long ago, and I think it was something like 4.5% of the U.S. population that's currently unbanked. And part of that is because of trust, because individuals may think, well, if the bank goes under, what's going to happen to my money? Well, first of all, and you said the number, $250,000. That's quite a bit of money. But it goes beyond that. You can definitely structure your wealth so that you're covered beyond that. So it goes based on the type of account that you have, the type of ownership that you have. So for example, if you have an individual account, Joss by himself, that can be covered up to $200,000. In fact, it's not that it can be, it is covered up until $250,000 for that one specific institution. You can open another account at another bank and it'll also be covered to $250,000. However, you can also open up a joint account with your spouse, and now you have an additional $250,000 coverage for yourself and $250,000 for her. And there's different types of structures that you can also have. Say if you have an IRA account, that could be an additional $250,000. Another way to protect assets could also be through a trust. So once you establish a trust for any additional beneficiary that you may add, you'll also gain additional coverage. So there's different ways to go above that. But yes, that's huge because the average individual does not have $250,000. And then, of course, you have investments, which are covered just by SIPC as well. So you have additional coverage on the investment side. But yes, one should definitely feel confident, comfortable that if their money's at a bank, if the bank fails, that money's covered.
That's super, super important because obviously, I mean, people want to know that and they want to know that their money is safe. And instead of, going to other alternatives or even the old-fashioned way, putting it under their bed, right? Their money under the bed, $250,000 under the bed. But yeah, that's good to know.
It happens.
Yeah.
It happens. Some individuals sometimes are just afraid of, what's going to happen to that money, especially as they amass, more quantities. So,
yeah, definitely. And that's really, really good to know. And I know, like you said, credit unions, it's a little bit different. It's not the FDIC insured, but it's different specifically for credit unions. But yeah, they offer the something very similar. It's super, super important. Now, let's just say you have no bank accounts at all. You just started working. How would you say is a good way for someone to consider working with a bank? Obviously, there's so many banks. There's even credit unions, right?
Yeah.
There's online banks, in-person banks. But let's just focus in person, right? The actual location. How would you tell someone to choose a bank? Like, what are some things to look out for that they should consider?
We have so many options today, and it could definitely be overwhelming. So one of the things that I'll say is do your research. Understand what's important to you. Really take a look at your specific situation now and understand what it is that you need. Are you someone that really hasn't had any banking history in the past? You basically have a clean slate. You have a lot of options. Versus say maybe you're someone that in the past has had some difficulty with banking. You may have had some insufficient funds charges. Maybe your account closed negative. You may have some challenges. There are a number of different accounts out there that one can take a look at. I would say as we take a look at doing that research, what services are important to me and what can I do to avoid a monthly service fee? Because many accounts are going to have a monthly service fee. So if I cannot avoid the monthly service fee because I'm not going to have the minimum deposit required, the minimum balance required, then I want to see what bank offers what it is that I need. So that's one. Two, though, you mentioned let's focus specifically on in-person banks, right? Brick and mortar. So at that point in time, I would say the relationship aspect. The relationship aspect for me is key. Are you able to walk into a bank and have a conversation with someone? If that's important to you, you really want to ensure that you have a physical presence in the geography that you live in. It may not be important to you. You may be someone that does everything online, that you may be okay making a phone call to customer service. If that's the case, again, consider that. But also understand that the bank that you choose should be a bank that you're going to grow with. It should not just be a bank for today and my needs between today and the next 6 months. It should be a bank for that period, but also as I think ahead. I'm always going to need money. And my life around finances is only going to get more complex. So what institution am I going to be able to align myself with so down the line I can do those complex things, such as possibly buying a vehicle or buying a home, investing? Do they offer all these different services? Because not everyone does. And then, of course, at what level and what types of products do they offer? Do they align with what I have envisioned for myself right now and also long-term goal, 5, 10 plus years from now?
Yeah, that's super important to, think long term. Because I think the bank that I'm with, it's because my dad told me that he's been there for 20, 30 years. And then I joined it. But now I have that bank, I have another bank, and then I have an online bank, and then my wife has a credit union. So we have 4 different bank accounts.
Yeah, and that's quite common, and it does get complex. And at one point in time, you may say, "Oh man, I have 7 different bank accounts that I have. How do I consolidate it?" Because now you have potentially 7 different relationships that you're managing yourself with different bankers, and you have to understand different guidelines of every single account in that institution. So another benefit that you want to consider in your specific situation and others similar is that the more balances that you have with one specific institution, the more benefits you qualify for, right? We talked about Chase. Chase, for example, has what's called Chase Private Clients. Well, for individuals, once they hit a certain threshold of money, they get additional services and discounts. And many banks offer something similar. So really consolidating into one financial institution, if the relationship with your banker makes sense, that might be the way to go, because now you're really maximizing your overall wealth and you're getting benefits from it.
Yeah, no, that sounds really, really cool. I know. That sounds, private client. That sounds pretty cool. But yeah, like that's that situation where me and my spouse are in, where I have a bank account, my personal one that I've been there for a really long time. I have the business one. She has a credit union, and then we have an online one, which ties in. A question that we've gotten a lot from people in the community is, I want to open a savings account, but I also want to open a high yield savings account,
Yeah.
and they don't know the difference, right? Obviously, there's a checking, there's a saving, and then there's a high yield savings account. Would you want to kind of like explain like what is the difference between them?
Yeah, most definitely. So checking account, what is a checking account? A checking account is going to be the one product that what we can write checks out of, right? If I'm going to be paying my gas bill, I can either write a physical check or I can use the online bill pay feature and send a payment for that. Typically, the rate on that's going to be minimal. It might be something around 0.01 annual percentage yield. And of course, it's going to vary per financial institution if it pays any interest at all. From there, you have your regular savings account. Regular savings account, it may be, you may have regular access. And what I mean by regular access is that it's now tied to your checking account. You may be able to access it through your debit card and you can make withdrawals out of it. These are accounts that are not going to pay a very high yield as well. I mean, we could definitely take a look at and reference what those are right now in the market, but it's not going to be very high. If you talk about a high yield savings account, or if we talk about the high yield savings accounts that are out there, normally there's a bit more of a restriction in terms of access, possibly not getting into those funds immediately. And many times it's because it's through an online only bank or offered as a service of a brick and mortar bank, where now it takes additional time for those funds to be made available to you. And most brick and mortar institutions do have these, although many times online banks are the ones that are known for them. If you really search, you will see that the brick and mortar banks also have some type of feature that's similar to this. But again, it's not going to be as accessible as the regular everyday savings.
I think the one thing that comes to my mind is, which is not as accessible, because there's a certain time, a CD, right? A CD is one thing that a lot of brick and mortar banks offer.
Yeah.
What is it called? Certificate of deposit.
Certificate of deposit. Yeah. And the way that works, you have a set period. It might be 3 months, 6 months, 10 months, 12 months. There's a specific curve where it'll basically go up, and again, it's going to differ depending on the market. It's going to differ depending on the institution, but you might find that a 10-month or a 12-month CD might be like the sweet spot where it offers the highest possible yield. And what that means is that your money is tied for that specific term. If you leave it past that term, depending on the institution, it might automatically renew. But what it means is you cannot remove the funds in that specific time. If I have a 12-month CD, it's tied in for 12 months. If I were to break that contract, because now it's there as a contract versus a savings where I can remove the money whenever I want. But if I break that contract in a CD, what happens either is I am penalized or I do not make any of the interest that I'm supposed to accrue for that time period.
Yeah, that's all super good to know. Someone that's probably watching, maybe they put money into a CD thinking it's a savings and they could pull out whenever, right? So it's important to know the difference between the different services that banks offer, which are really good to know. From savings account, checking, high yield savings, CDs, to opening an investment account, business account, credit cards, debit cards, all of the above. I think we talked a lot of good stuff when it comes to what is banking 101, how a bank can allow you to reach your financial goals. I don't know if that's something you want to touch briefly, how a bank is an institution that it goes beyond the withdrawal deposits, but it's an institution that can help you reach your financial goals, buying your home, starting your business, whatever it is.
Yeah, so great. I mean, we touched on this earlier, but I think a lot of it goes back to the planning. What do I personally want in my personal journey? Do I want to buy that house? Do I want to buy, say, an apartment complex? Do I want to establish a business? And now I think of what network of individuals do I need in that quest? It might be an attorney, because now I'm setting up, say, 5, 6 different rental properties, right? And I also want to make sure we talked about risk, that I'm covered in that sense as well. You want to have a CPA. They can obviously now manage your taxes and the flow and that money. But of course, where is that money deposited and who's going to help me with all that? That's the bank. But again, beyond the deposit, as you were saying, what services can I leverage from that financial institution? It's going to be that business banker that's the expert on things like cash management services for my small business. It's going to be that home lending advisor. It's going to basically be able to guide me not just on the purchase of that building, but as rates change, as rates come down, making me aware of ways in which I can leverage the equity that I have in my home and my commercial buildings to possibly reinvest and buy additional properties if that's something that I want. So it really goes back to relationships. And what I mentioned was, does the individual that I'm establishing a relationship with understand what my needs are and how I can get there down the line? Of course, leveraging their expertise, leveraging what tools and services they have to help me get there. And then, of course, we have the financial advisor as well. We've already talked about that in terms of retirement, kids' education, whatever the case might be. Is it in alignment with what I want?
Yeah, that's all. That was perfectly well said. I think someone that's listening to this and thinking about, like, maybe they don't have a bank account or they want to establish a more serious bank account, that they could look in the future and how the banking relationship can help them reach those financial goals. Because that's what I'm hearing from you saying is, like, yeah, there's a lot of benefits in having that relationship with the banker that can give you access to all the different resources and everything. And you already shared a little bit about your career journey as well, and that there's so many career paths within the bank. So I think that's super important for people to know. And it's just as we wrap up our conversation with all this, banking, talking about banking and all this, what is something like maybe some sort of piece of advice, whether it's tailored into like how you buy your first house or your career journey or whatever it is that you want to leave the audience, or something that as we wrap up this conversation?
I'll start off, I'll mention two things. One is very basic. Why should I open up an account? On average, check cashing places charge about 3% for a check, which now means with what? I'm cashing a check of what? Let's say $800. I'm paying $24 to be able to cash that check. I do that twice a month. I'm paying almost now $50 in check cashing fees. So when we think about communities that may not really align themselves with the thought of, well, banking is for me, if for nothing else, I would just say, think of how much money you could save every single month. We mentioned the fact that some individuals have a concern that, well, I'm not going to be able to meet the minimum deposit requirement, and therefore I'm going to be charged a monthly service fee. But even if you are paying a monthly service fee, which for some accounts, depending on the banking institution, can be between $5 to maybe $15 a month, that's less than what you're paying in check cashing fees. In addition with that, now what happens? We have now the relationship, and everything that we have been talking about, you have access to that. Versus, again, paying for the check cashing fee and the other monetary services that are out there and not having access to a financial institution. So that's one. So really, let's get started as soon as possible, because the longer that we wait, the more fees that we're paying. And of course, with that comes different services like establishing credit. What benefits does a bank offer the individual to possibly start their credit, to improve their credit? And many banks offer a system or a service for that. So that's one. And really, the other one that I'll just mention would be around careers. And that's the fact that the misconception is, if I'm going to go into banking, it's only because I want to be a teller, or potentially I want to be a banker. But there's just so much more, so much more. If you want to go into programming, I would definitely consider banking as well. If you want to go into public relations, definitely banking as well. Why? Because, my role at Chase partly involves that, public relations. And I said, aligning myself with local government, with nonprofits, and really to uplift the community. And if I thought, okay, well, I'm going to go into banking just to become a banker, and I did not look at the big picture and consider a role like this, I would never be in banking, right? So definitely there's a realm of different possibilities within banking, and it's not just tied to that teller role.
Yeah, that's not even a role that's a teller anymore. You're right.
Correct.
It's slowly changing because the world is changing. It's evolving. But yeah, thank you so much, Zhemyr. I think this conversation was really informative for the audience, you know, from your career journey to the different career paths to how a bank can truly help you reach your financial goals, which I think a lot of people have that dream of buying their first home, building generational wealth, saving for their kids' college and all of that. So thank you so much. It's always a pleasure to have you here with us on this podcast, and we look forward to more future episodes with you and continued work and the help that you always do and help at our nonprofit at various events and different things that we do. So we appreciate you and all the work that you do. Thank you, Zhemyr.
It's a pleasure to be here, and thank you for the work that you guys do.